Good day, everyone. Welcome back to another day trading recap. Today I traded IBM and CCL, and I'm going to explain exactly why I got into these trades, at what level, and the exit plan. So let's get on with it. So today, IBM, they had a catalyst. They had good earnings, and it was above Wall Street expectation. So let me bring over here the article. Strong fourth quarter results show IBM's plan is working. The company reported on Monday that it notched revenue of 16.7 billion for its fourth quarter of 2021, up 6.5% or 8.6% adjusted for currency, compared with the prior year quarter spin-off adjusted result. It was the tech giant's highest quarterly growth since 2011 and well ahead of Wall Street consensus forecast of 16.1 billion. So that was the catalyst. It had very good earning, and if we go into the technicals, you see yesterday it had a very nice hammer candle, and it gave me enough room between yesterday's high and all the moving averages. And what I saw this morning is this was the level I was looking at, 128.82. This was previous day, very close. It was previous day close, and it was very close to previous day high level. That was the key level. So what happened yesterday in the post market, it shot up all the way to 136, but it came straight down. But when it came straight down, it bounced off this 128 level. That was the first indication that this might be resistance, right? And if you look at the small time frame, this level actually held a few times. So it held here yesterday in the post market, and today in the pre-market, this level held again. So this is why I had this level marked off. And right when the market opened, it was hovering. It was hovering around this level. I saw the price go down, and as soon as it came back up, I went long. So I got a very nice move over here. I got a 2R winner, this for my first partial. And then the price started like being very choppy. I got out another half, and the rest I got out at break even. I had a target over here at 133, which was the pre-market high. If I held on to my trade, I would have got onto it. But that's another discussion for another time. Something that I'm working on, which is trying to hold my trade for longer. But that was a good entry, and this exit was not bad, but maybe I should have held some for this target over here. But that's the explanation for IBM. On to the next trade. So the next trade is on CCL, Carnival Corporation. So it kind of had the same daily pattern, right? Yesterday it had this hammer candle, but the difference between this one and IBM is that you can clearly see in the pre-market it was below yesterday's close and yesterday's high. You can see right here in the post-market and today's pre-market, it was below that key level that I was looking at. Furthermore, you see back on the 21st, it bounced off this level at around 1980 again. It bounced off this level, and then on yesterday, it dropped way below this level. It came all the way back up, and it slammed its head against it again. So that's first indication this might be resistance. On top of that, you can see it in the pre-market, slammed its head against this level again. It got shot right back down. So in this case, I set a limit order at 1974 or 1975. I had a stop of only around 10 cents, even maybe a little bit less, maybe 7 cents, because I wasn't willing to risk a lot, because if it works, it works, right? I mean, it's a clear level. So I'm not going to stick around and say, oh, well, maybe the level is a little bit higher. No. If it works at this level, it's going to work. So that's exactly what happened. I got in over here with a limit order. So limit order, it was sitting there for a good, maybe, I don't know, a good 10 minutes. In fact, this might have been a good long, because this is a key level. It attracts when it's a key level, it tends to attract the price. And I forgot to mention, but there was also a big ask at this level as well. especially in the pre-market. So I got in over here, and I rode it all the way back down. My last out was 1940. 1940. I got it in 1970, 75 around, and that was a great entry, a great trade for me. It was over a 4-hour win. I had a target down here, but what happened? I think I kind of panicked because this over here was meant to be a partial. I accidentally added to my position. So yeah, so I end up getting all out over here, but still it was not bad. Maybe I should have re-entered over here when it broke all these moving averages, but overall it was not bad. So those were the two trades. If you find this video useful, please consider subscribing and liking. And see you guys next time. Thanks.